Stock markets, also known as equity markets or capital markets, are centers where shares of publicly listed companies get traded. Now, there are times where you will hear the stock market referred to as the equity market or stocks referred to as equities. And the term equity is referring to an accounting term used when preparing financial statements. And the shares of the company show up in the equity section of a company's balance sheet, one of its financial statements, and that's why you'll sometimes hear the stock market or stocks referred to as the equity market or equities, respectively. So we'll get to financial statements later, but just for now, know that when we use the term equity or we hear the term equity market, it is referring to the stock market. So the stock market is normally divided into two types: primary markets and secondary markets. Primary markets are where companies issue stocks for the first time to the public. The secondary market is where investors and shareholders buy or sell stocks among themselves, and the majority of trading and investing occurs in the secondary market. And these secondary markets are normally represented by a physical entity known as a stock exchange. Now, stock exchanges are networks that connect investors and traders to each other. They act as a platform upon which traders and investors can buy and sell from each other. And many countries have their own exchanges, but larger countries like the United States will have several. And these exchanges used to be physical floors where brokers would shout buying and selling orders for various stocks for their clients and for themselves. However, nowadays, these have been replaced by large data centers and supercomputers that handle all the exchange transactions at sub-light speed. The most well-known exchanges in the United States are the New York Stock Exchange and the NASDAQ.